Hello and welcome to part 7 of the ChartMill Academy Series. In this video I discuss a handy trading tool that is available in ChartMill and which will help you to quickly determine the exact number of shares to buy in proportion to your available trading capital. Those who follow our articles, videos and emails know that we constantly focus on managing risk when trading stocks. Selection and timing each have their rightful place, but at least as important is how you handle the preservation of your capital. It doesn't matter if you manage to develop a strategy that is profitable 90% of the time. If you can't control the loss in the other 10%, you are a sitting duck, unable to be successful in the long run. This tool is like having someone look over your shoulder the moment you decide to take a position. My name is Christoph and welcome to ChartMill. The position sizing tool will help you to clearly define and minimize your risk. Moreover, the calculation tool is able to point out a number of danger signals that may occur based on the data you entered. In this video, I will use the tool in an example setup. That way you will quickly notice what the possibilities are and what advantages this tool offers when using it. As an example, I'll use the chart of Pretium Resources Incorporated on date of 4 March 2022. The stock closed last Friday at $14.89, breaking through resistance that had been in place since early November. This breakout, by the way, involved quite strong volume. All elements are present for a low-risk setup, and by placing a buy order just above the high of the last candle, we aim to speculate on a further rise. By using the PST tool, we will be able to determine the following aspects in function of our available trading capital: the exact entry, the exact stop loss, the maximum loss if stop loss is hit, the number of shares which can be bought, and the total invested amount. To open the position sizing tool, press the ruler icon in the blue horizontal bar on the far right. This will make the tool appear and you can move the screen to any position you want. Next, click on the chart. This will activate the PST tool for that particular stock. The top part of the tool contains the fields that you have to fill in before the tool starts calculating. A number of things are already filled in by default, and I will immediately show you how to change these default values. In this example, the risk percentage is defaulted to 1% and the available capital to 25,000. The cells for entering commission, charges and any taxes are left blank. The rounding box allows you to round the number of shares of stock to a multiple of 1 or more. For example, if the tool calculates that you should buy 17.3 shares, the default rounding will be 17 or 18. However, if you set 2 as the rounding component, the number of shares will be rounded to multiples of 2. You can change these data manually in the provided fields, but it can be easier by changing the default settings on your account page. To do so, click on your account name at the top right of your screen and select My Account. Then click on the item Position Sizing Settings. This is where you can fill in the upper fields so that they will automatically appear as default values every time you open the tool. As an example, I set the account to 50,000 with a risk percentage of 1.5%. The tax part will in many cases remain empty. This is only applicable in certain countries, and I'll leave it blank for now. In terms of commission costs, I fill in a standard amount of 5. If the chart page is now reloaded and the PST tool relaunched, you will notice that the tool opens with your predefined default values. The only thing left to do now is to insert the buy price and the stop loss. This can be done manually, but it is also possible by pointing the cursor to the location in the chart where you approximately want to set the buy order and then right-clicking. In the menu that appears, you select Entry Goes Here. The value that corresponds to that location will now appear in the position sizing tool. This value can then be adjusted manually. In this case, the most recent high is at 14.99, so I set the entry to 15.04. You can use the same process for defining the stop loss. Again, move the mouse pointer to the approximate location where you want to place the stop loss for this position. I decide to place the stop loss just below the low of the breakout candle. Now right-click and choose Exit Goes Here. That value will now appear in the exit price field of the tool. The low of the last candle was 14.69. so I change the stop loss to 14.64. The other choices in the menu that appear when right-clicking, being Add Stop Here and Add VWAP Here, have other functions and are covered in another video. By entering the entry and exit price combined with the previously determined default values, you get a lot of interesting feedback from the tool. With these settings, for example, the tool tells us that the risk per share is $0.41. The maximum loss if the stop loss is hit amounts to $750, and this corresponds to 1.5% of the available trading capital. Remember that both the risk per share and the maximum loss take into account the commission costs and additional taxes if applicable. The maximum number of shares to be bought is 1,850, and the total investment amounts to $27,834, which is almost 56% of the total available portfolio. The break-even price indicates how much the position should initially increase to cover costs, commission and any taxes. In this case, only a commission fee of $5 is charged. The tool offsets this fee for both buying and selling, which in this example results in a break-even price that is only 0.04% higher. The liquidity shows the average volume over the last 50 trading days, and the column next to it shows how many days would be needed to buy all the shares we want. In this setup, two components are marked with a red cross: the total invested capital in this position and the stop distance. The total investment in this stock is more than 55% of the total available trading capital, and the red cross draws our attention to it. If something were to go wrong with this position, it would have a serious impact on the total portfolio. The tool warns about this as soon as an individual position exceeds 25% of the total port. The stop loss warning is based on the average true range. The current stop loss at 14.64 is less than 2 times the average daily movement, so the probability of this position being stopped out is therefore considerable if you want to hold positions overnight as a swing trader. It is important to give the price some breathing space for interim price fluctuations. And by default, the tool is set to a minimum ATR value of 2 before the stop loss is considered okay to overcome normal intraday price movements. Only when I change the stop loss in this example to 14.48, which results in an ATR distance of 2.03, a green check mark appears for the stop distance as well. Changing the stop loss obviously also has consequences for the size of the position. The number of shares that can be bought with the new stop loss has decreased to 1,321 instead of 1,850, reducing the total investment to $19,877, which is still almost 40% of the total portfolio. To lower the total investment without changing the stop loss, you will have to reduce the risk percentage. And if I change this to 1, it is still slightly above the 25% limit. Changing it to 0.95 is perfect. Everything is green now. The number of shares we are allowed to buy is limited to 830. The total risk if this position is stopped out at 14.48 is $474.9, or 0.95% of the total available account size. So the tool automatically adjusts all values based on what you enter in the top fields. For example, if you change the total available trading capital to 25,000, the number of shares and the total risk will decrease because all calculations are done based on the modified available capital. Pay specific attention to the effect for the break-even price. Initially, the position had to increase by 0.08% to cover commissions costs. Because the trading capital was reduced by half to 25,000, but the commission for this position was kept at $5, the position already needs to increase by 0.16% before these costs are covered. So for smaller portfolios, it is extremely important to pay close attention to the minimum commission fees charged by the broker. If you lower the total available capital to say $7,500, the total investment for this position will drop to around $1,650. If the minimum commission to be paid is still $5, then this position already needs to increase by more than 0.60% just to cover the costs associated with this position. In fact, many brokers charge a minimum fee regardless of the size of the amount you invest. For smaller portfolios, this can be a very big disadvantage, making real active trading as good as impossible. The following limits within the position sizing tool are used to determine whether or not a warning signal is shown. Total risk, a red circle if the total risk of the setup is higher than 2.5% of the trading account. Risk per share, a red circle if the risk per share exceeds 15% of the share price. The number of shares, a red circle if the desired number of shares exceeds 10% of the average daily volume, the average over 20 days. Investment, a red circle if the investment of the setup becomes more than 25% of the total trading account. Break-even price, a red circle if the break-even price is more than 2.5% higher or lower in case of a short position than the entry price. ATR, a red circle is not applicable, the value and percentage are informative only. And the stop distance, a red circle if the stop distance is less than 2 times the average true range value. And for the liquidity, the value and percentage are informative only. Keep in mind that the warning signals are purely indicative and mainly concern positions held for at least several days. For day traders who trade on the smaller time frames, this tool is less suitable. For swing and position traders, on the other hand, this tool is very useful. First of all, because the tool automatically calculates how many shares you can or should buy. The biggest advantage, however, is that by using the tool, you'll effectively be pointed out to the potential dangers and you'll consequently become a lot more aware of them. So be sure to make use of this tool. Once you have set your own default values for the tool, in no time you will get valuable information about your position size and the related risk. This can only benefit your own decisions and results. So if you have any further questions or comments about the tool, be sure to leave a comment in the comment section below. Thanks again for watching this video. And if you found this video useful, please give us a like and don't forget to subscribe to this channel. Until next time, trade safe.